Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. And in today's markets, guys, no macro news, but the most hated rally simply continues. And I call it the most hated rally because it seems as though everywhere I turn, people are constantly asking themselves, how does this market keep going up? Well, there's obviously a few fundamental factors at play here, namely the macro, guys. The macro is good. The jobless claims are still low, so unemployment is still low. The GDP numbers came out for last quarter. GDP, the economy is still strong and moving forward. And in terms of interest rates, guys, well, interest rates will be coming down over the course of the year because the Federal Reserve has gotten inflation under control. So all of your macro criteria are moving in the right direction. And on top of that, we've just now almost all but concluded the earnings season for Q4 of 2023, with about 97% of all S&P 500 companies having reported so far. So what I have prepared for you guys today is we are going to take a deep dive into the percentages of companies that have either beaten or missed on earnings and revenue this quarter in a nice report that was just recently prepared by FactSet. That report just basically outlays some statistics as to this most recent earnings season to give us a better idea of how are companies positioned for the forthcoming year. Do they view as a recession as one of the likely scenarios, or is it just going to be business as usual for them? Well, a quick little tip here, guys. We have covered probably about 40 or 50 different earnings reports on the channel so far over these past couple of weeks, ever since earnings season has started. And I can't think of a single company that we've reviewed together of all of the big companies in the world that have necessarily mentioned a recession, let alone are guiding for it. So we're going to take a look at that report and see if the report corroborates our own personal experience that we've been having while viewing these earnings reports. Secondly, in the video, we're also going to be going down our technical analysis, of course, on our major indexes and our major tech names. And lastly, conclude with my portfolio and trades to see how we wrapped up the week. So without further ado, guys, let's get right into today's video. So SPY up another 0.94%. QQQ up 1.51%. You would think that there was some big news that came out today. Nope, just regular market movements, and even the Russell getting some love with about 1.06% to the upside. All in all, guys, was a very beautiful day. Market rotation remains healthy. Financials pulling a little bit back, but healthcare largely making up for that pullback in financials. Now, in terms of the heat map, you will see that semiconductors once again on the day today. Very big outperformance by our semiconductor industry. Most of big tech was still green on the day. Couple little exceptions in terms of Google and Apple. Google and Apple have really been struggling over the past couple of weeks, pretty much a month at this point, but the rest of big tech making up for those little losses. And in terms of the sector rotation, guys, you can see that the bottom half of the market is very healthy. Healthcare putting in some very decent gains, even real estate and energy participating in today's momentum. Financials a little bit down on the day. On the one-day relative performance, you can see here that most of all your indexes, as we just saw, are green, with only really consumer defensives and utilities slightly in the red. 1 week relative is very beautiful as well. Communication services led to the downside, most notably by Google going red pretty much all week at this point, and healthcare utilities slightly down too, but financials etching out a little bit of a gain. Very good performance as a whole. And in terms of your year-to-date performance, guys, take a look at this year-to-date performance. A few notable outliers, namely in the semiconductor industry. Once again, NVIDIA, hard to believe that we're only pretty much only 2 months concluded year-to-date. NVIDIA already up 66%. But amongst other names, guys, Meta 42%, Amazon 17.5%, almost. Some healthcare names in the mid-teen digits as well. Eli Lilly 34% to the upside. Financials having a great start to the year as well. You know, roughly between 8 to 15% depending on the name that you choose. So most of the market, guys, has been participating in this rally so far. So the rally is fairly broad. And then you have a few names that are obviously lagging behind, namely Tesla, and even Apple and Google year to date, guys, negative, representing some very decent buying opportunities in my opinion currently. So before we get into more technical analysis, guys, I want to go over that FactSet report that is pretty much fresh off the press from the last few days. We're going to take a look at exactly how this company has analyzed the earnings so far, and if they have anything specific to say about how earnings have been proceeding. So taking a look at that report prepared by FactSet, guys. If you don't know who FactSet is, their stock ticker is FDS. They're a financial data provider, and they most notably provide a lot of data for not only accounting firms, investment banks, commercial banks, you name it, guys. They are one of the industry leaders in terms of data analytics for financial markets and for companies specifically. So their reports can definitely be trusted, and you can tell by this share price how solid of a company this is. So just goes to show, guys, that the reports that they do are very well known by the industry and very well respected as well. So let's take a look at what they had to say for the most recent earnings quarter. Well, it came out February 29th, so very fresh report. Here's your earnings scorecard for Q4 of 2023, with 97% of all S&P 500 companies having reported earnings so far. 73% of those companies have reported a positive EPS surprise, and 64% of those companies have reported a positive revenue surprise. So most, if not all, of S&P 500 companies, guys, a large proportion of them beating on both revenue and EPS for the most recent quarter. Doesn't sound like a recession, does it? Now, in terms of earnings growth for Q4 2023, the blended earnings growth for the S&P 500 is about 4%. It will mark the second straight quarter that the index has reported earnings growth. So companies coming out of their 2022 and 2023 transition periods where they were getting used to high interest rates and cutting costs in the process. And while they were doing that, their businesses were obviously still moving forward. And now finally, 6 to 9 months later, we get the results from that. It just goes to show that they're continuing to produce revenues, all while maintaining costs low and increasing EPS. So very, very good. For the second quarter in a row, all companies are pointing north in the right direction. Now, for earnings guidance for Q1 2024, 71 S&P 500 companies have issued negative EPS guidance, and 30 S&P 500 companies have issued positive guidance. Now, this could be misleading at first, guys. 71 companies having reported negative EPS guidance and only 30 positive EPS guidance. Well, we have to consider what represents negative EPS guidance. So if a company guides for 10%, or if analysts are predicting rather 10% EPS guidance for the foreseeable future, and the company only comes out and says, well, we're only going to be growing EPS at 8 or 9%. That is actually negative EPS guidance. Still, the company is growing, right? However, it does constitute negative EPS guidance. So that has to be considered. So this headline right here, a little bit misleading. A lot of the companies that we've reviewed so far in earnings, that was their problem. The guidance already was for about 10 to 11%. And then the company came out and said, well, we'll only be growing at about 8, 9, or 10% under the previously issued guidance. So is it truly negative? Not that much. That's why it's a bit of a misleading headline here. Of most companies that we've seen, guys, none have really forecasted for EPS falling off a cliff or significant decreases in EPS, which would be synonymous with recessionary times and caution. Now, in terms of valuation, the forward 12-month PE ratio for the S&P 500 is about 20.4. The PE ratio is above the 5-year average for the S&P of about 19 and above the 10-year average, which is about 17.7. So, we are currently a little bit overvalued in terms of recent history. However, not so overvalued that it becomes a problem. Now, here is a nice little tidbit from the markets. Now, given concerns in the market about a possible economic slowdown or recession, have analysts lowered EPS estimates more than normal for S&P 500 companies for the first quarter? Very key point here. The answer is no. During the months of January and February, analysts lowered EPS estimates for the first quarter by a smaller margin than average. The Q1 EPS estimate was down by about 2.2% from December to this January. Now, in terms of typical downgrades that you may get in a given quarter, take a look here at the statistics. Usually during the first 2 months of a quarter, the historical average of analysts guiding down in terms of EPS here has been about 3%. So we are better at about 2.2% to the downside. During the past 10 years, the average decline in EPS estimates here have been about 2.7%. During the past 15 years, the average has been about 2.9%. So across all metrics, analysts have guided down less than they have in the past. Just goes to show that analysts remain bullish on most companies in the S&P 500 still and are not they're not taking away too much from those companies' guidance because of the fact that the companies are still in a favorable macro environment. That is very, very noteworthy, guys, if anything here. So then we're going to move on to another little, some more little tidbits of informations here. So we want to take a look at how at the different percentages of companies that are beating earnings. So let's break down a few of those percentages, shall we? So in terms of the percentage of companies beating the estimates, we saw that before. That was about 73% of companies beating EPS estimates for this past quarter. What are the historical averages? Well, let's take a look here, guys. The percentage of companies that report EPS above the mean is below the 1-year average of 77%, below the 5-year average of 77% as well, and below the 10-year average of 74%. So companies as a whole, less companies are beating on EPS than historical averages. But it just goes to show, guys, that we're once again talking about the transition period for a lot of these companies dealing with higher interest rates and having to cut costs and streamline many different aspects of their business in response to those higher interest rates. So despite a very heavy transitional period in the markets, still, we're quite close to historical averages, standing at 73% of companies beating the estimates, which is very, very good in my opinion. In terms of your earnings surprise percentages, they are also below the 5-year average. So companies reporting earnings that are 4.1% above expectations. So when they surprise, how much do they surprise by? On average, about 4.1% to the upside is the surprise. The surprise percentage is below the 1-year average of 5.7%, below the 5-year average of 8.5%, and below the 10-year average of 6.7%. So despite the fact that this is still a positive number, we are below our historical averages, once again leading into the fact that it is a transition period. The past 6 to 9 months have been a big transition period for a lot of companies. But that being said, even through this transitional period, guys, companies are still able to churn out earnings surprises, basically beating and raising for the future, which is very, very good, guys. Nothing bad to say about this report so far. Now, market is rewarding positive EPS surprises more than the average. This is commentary as to the bullishness or the bearishness of markets. When a company reports a positive EPS surprise, how much does the stock price go up after earning? Well, here you go. To date, the market is rewarding positive earnings surprises more than average and punishing negative EPS surprises less. So they're rewarding the ones that beat more, and the ones that miss, they're hammering them less, which is good. It just means that the market is in a very, very bullish environment right now, to where outsized beats to the upside are getting rewarded more, and misses to the downside are just getting punished less, which is very, very good. It shows that the market is overall in a more bullish sentiment. Now, companies that have reported positive earnings surprises for Q4 have seen an average price increase of 1.4% 2 days before the earnings release through 2 days after the earnings release. This percentage increase is larger than the 5-year average price increase of 1%. Very, very solid, guys. And in terms of your declines, companies that have reported negative earnings surprises for Q4 of 2023 have seen an average price decrease of only 1% if you measure between 2 days before the earnings through 2 days after the earnings. The percentage decrease is smaller than the 5-year average price decrease of 2.3%. So that is very good. In line, right? If the companies miss right now, they usually have a price decrease of about 1%. The 5-year average, if companies were to miss, is about 2.3. So not only are we getting rewarded higher on the beats, but we're getting punished less on the misses. Very good. Just shows you the bullishness, the bullish environment that the market is currently having right now. The sentiment is very bullish, even when companies miss. Now, percentage of companies beating the revenue estimate. So we've been talking a lot about EPS because that's what matters a lot. But here's your revenue estimates. Percentage of companies beating revenue estimates, 64%, is below the 5-year average. So here's some conflicting data. In terms of revenues, 64% of companies have reported actual revenues above the estimated revenues, and 36% have reported actual revenues below the estimate. So the percentage of companies reporting revenues above estimates is below the average of 67% and below the 5-year average of 68%, but equal to the 10-year average of 64%. So this is right in line, guys, in terms of companies beating revenue And it goes to show if we're still relatively within averages, I'd be nervous if this number was only like 50 or 40%. But the fact that we're so close to short and long-term averages at this point, while going through fears of a recession, while going through the highest interest rates that we've had in almost 20 years at this point, it's very impressive that the market is consistently beating revenues like this in the same historical proportions as before, when interest rates were not this high, obviously, right? So very, very good for the market there. The revenue surprise percentage of 1.2% to the upside is below the 5-year average as well. So companies are reporting revenues that are 1.2% above expectations. That's what they're doing now. The surprise percentage is below the 1-year average of 1.6, below the 5-year average of 2, and below the 10-year average of 1.3. Now, your revenue surprise could be fairly normal, guys. We know that the consumers are currently in a very tight cycle right now. They're not spending as much as they did in the 3 years prior. Now that interest rates are higher, consumer discretionary spending is down, and we've seen that across a lot of companies. But it's good to show, that companies are still able to surprise to the upside, although they may have lower consumer discretionary incomes for a large part of them. We're still not too far off of their averages. Just goes to show you guys that when things return to normal, when interest rates come down and consumers gradually build up more and more disposable income, we should start beating on these revenues as well. So very, very decent report. No red flags at all from our earnings cycle. And the last thing that we're going to take a look at together here, guys, is one of the charts. This is a very well put together report, by the way. It's about 40 pages long. You don't have to look through all of it, but I will, for any of you that are interested, to look at this, because I do believe that it provides some key insight into the market sentiment right now for the remainder of the year. I'll leave the link to the report down below in the description if you want to take a look at some of the slides on your own time here. But we're going to go over this last chart here. So here is a visual representation of how well companies are beating depending on their industry. So here's your Q4 of 2023, S&P 500 earnings above, in line, and below estimates. So above estimates is green, in line is yellow, and red is obviously below your estimates. You can see who is leading the pack. Well, information technology stocks are leading the pack. Most of them are above. And as it goes down, as you can see, which industries are hit the most currently: real estate, financials, materials, and utilities, guys. All of the sectors that are most sensitive to interest rates have been the ones that are coming in, on the lower percentage scale in terms of how many of them beat versus how many of them miss, right? So you can see here, real estate, only about 55% of companies actually coming in above the estimates. But as we move into the consumer segments here, where a lot of companies have a lot of cash on their balance sheet and are not really affected by interest rates, you can see how their performance has been. It's been absolutely incredible. So we're just waiting for the bottom half of the market to turn around when interest rates turn the corner as well. So that's in terms of your earnings. And here's your revenues. So S&P 500 revenues that are above, in line, or below estimates. Well, here is pretty much only above or below. And once again, here you can see that for the most part, guys, most companies are reporting revenues that are beating in terms of your percentages above 50%, right? The only two that have kind of dropped off, number one is going to be utilities. Obviously, once again, interest rates are a big player. That consumer staples and consumer discretionary have gotten hit on the revenues as well. That's just consumer discretionary spending that has been down ever since interest rates have been high. But then again, these companies that have had problems with revenues were able to do a great job at cost management. They laid off a lot of employees. They minimized, or they optimized their supply chains, and they were able to save costs where they were. So their earnings, their bottom lines went up, even though a lot of them had declining revenues. So this is also very good, guys. All in all, no red flags. Just as a quick recap here to give you guys some bullet points. So the earnings recap, as we just saw, the analysts are overall bullish. They're down. Their negative compensation for EPS is less than historically averaged. The companies also aren't guiding down big. From all the ones that we've went through as well, any misses on guidance, guys, have been really, really small misses, right? We're talking about companies guiding from 10 to 11% and then coming out with new guidance of about 8 to 9%. That's not a big miss in my opinion, guys, as long as things are still positive. We also dealt with the transition effect of 2023, higher interest rates, and then a restructuring of costs from a lot of these companies. So now that they've done all of this remanaging of costs, right, now they'll be able to benefit from the upside of all those savings. Most companies are beating earnings, as we saw in the report, just off of a percentage basis. Any negative guidance is small, yet still growing. That's what we just talked about as well. And no companies have issued recession warnings. None of the companies that we have gone over together have ever indicated that 2024 was going to be a period of a potential high probability of a recession. And all the companies have not been guiding towards that as well, or you would see significant decreases in guidance. So all in all, guys, earnings season wrapping up, and it was very bullish. Just goes to show that the bulls are in full control of this market. Companies have managed their capital very efficiently amidst these higher interest rate times, and now they are showing the dividends of all of that cost control and cost management and cutting of employees as well. And you can see everything is just moving in the right direction, guys. And I share the same opinion. Recession for 2024 is most likely canceled. So with all that being said, guys, let's now jump into our major technical analysis on our indexes, shall we? So in terms of SPY, up 0.94%. SPY just continuing with this daily uptrend right now. So SPY has always been in a daily uptrend. We were just looking for the daily higher low and higher high. Yesterday's video, I showed you guys that the daily higher low was most likely set. Why? Because the bulls regained control of the hourly, and that just maintained over the course of the day today. So daily higher low is currently set right now at about 505.12. Any move lower at this point, just going to be for another daily higher low for further trend continuation at this point, right? We are etching up to the top end of the trend line right now, but there's no reason that the SPY just can't consolidate a little bit sideways and then make another run higher in the future here. Any March consolidation, guys, if we get some extended March consolidation, I'm not expecting some large drawdowns. If anything, guys, the monthly candle that I'm looking for may just look something like this, where you get a little bit of a spike down, a little bit of a wick early on in the month, and then closing the month pretty green. So that's what I'm expecting. If we do have some seasonality come in, a little bit of March early sell-off, I'm just expecting, us to move down, but us to close the month at relatively high levels as well. Momentum is very good on the weekly. No red flags as well. Bulls still in full control of this weekly uptrend. Nothing to say. And on the monthly as well, the month just closed yesterday. You can see no red flags at all. Look at this candle close on the monthly SPY, guys. Extremely bullish. Bulls are in absolute full control. And before we have any meaningful indication that it's time to go short, guys, it's going to be a while. To go short, we really need to see the daily downtrend formation. And we haven't seen a daily downtrend formation on SPY ever since the rally started back here in pretty much the month of November. So that is what we're going to be looking out for. Anything short of that, and your bulls just remain in full control. Now moving on to QQQ, same principle on QQQ. QQQ finally reconfirming the daily uptrend. So contrary to SPY, QQQ actually did set a daily downtrend a few times recently, once here and once here. Before that, nothing. And before that was pretty much the month of October. But as of now, even despite setting the daily downtrend back here, they got saved by NVIDIA earnings. And now what happened? Bulls are back in full control of this daily uptrend. So now the daily higher low is set. 434 pretty much is going to be the mark. Any pullback at this point, just going to be looking for a daily higher low for further trend continuation for your bulls right here. Looking very good on the monthly as well. On the weekly, everything is looking very beautiful. Weekly uptrend just remains confirmed by the bulls at this point, and monthly uptrend similar, no red flags whatsoever. Bulls in absolute full control. Look at this beautiful candle close on the monthly. Apologize if it's not very clear because of these trend lines right here, but extremely bullish candle close on the monthly. So the bulls are in absolute full control, guys. Same thing for QQQ until we see a daily downtrend. There will be no extended weekly consolidation on QQQ. Your bulls remain in full control. That being said, we are approaching the trend line, but like I said again, no reason that we can't just move a little bit sideways and consolidate before putting in another leg higher. So looking very good. In terms of financials moving flat on the day here. What we need to watch out for is this daily higher low right here, 39.95. Take that out, you set a daily downtrend on financials and could be in for a little bit of weekly consolidation. Now, weekly on financials is extremely bullish. Any weekly consolidation just looking for a higher low, anything above 37 at this point, guys, weekly higher low. But if your bulls just remain in control of this daily uptrend, consolidate sideways at the top. Look, financials does this, has done this in the past, right? Can consolidate sideways at the top end of a range for a while and then just proceed north. Now, in terms of your targets north, we're going to be looking for here, guys, right? 40.8 is going to be your first level, and then it's going to be the all-time highs, right? So this little range right here is going to be the one that we're watching out for. If you want me to extend these lines, we can extend these lines right here, but it's about pretty much, let's call it 41 to about $42 flat, and that's going to be a very, very good target for financials. As a whole, guys, bulls just remain in absolute full control of all of your major indexes, and it just shows that the rotation is extremely healthy. Now, in terms of healthcare, guys, healthcare never lost the daily uptrend. It was beautiful, and we were worried that potentially yesterday into today, could we break the lower low? That would have been a break of about 144.25, but the bulls today said no. So your daily consolidation was underway. You could see this clear hourly downtrend, daily consolidation. When does daily consolidation finish, guys? You should know this, right? When the bulls take the hourly trend back. So you can see this beautiful engulfing move over the course of the day today. And if the bulls just recapture this hourly trend into Monday, daily bounce is just underway, and we just maintain this beautiful daily uptrend, targeting the previous highs 148.29 at this point. No red flags for healthcare whatsoever, but if we do set a lower high into lower low, that would be notable to us. We will be closing below the 12 EMA, which hasn't happened that often ever since the start of this rally, and then we'd be in for a little bit more weekly consolidation on healthcare. But is that a problem for the healthcare industry? No, because we have a very good fallback area, guys. This previous all-time high should be acting as good support, talking about 142. So if we do pull back, the bulls have tons of space, anything above 137.13, looking for a weekly higher low for further trend continuation. No red flags at all. The bulls in full control, even if they lose the daily, guys. The bulls in full control, not only of healthcare, but of all your major indexes as well. It's pretty much the same thing across the board. And the monthly looking very bullish as well. Bullish continuation to the upside at this point. Monthly trend well underway. And look, it's just starting, guys. After how long? After about 2 years of sideways consolidation at the top. Look at your MACD, monthly MACD crossing now for the second month in a row. So I do believe healthcare is finally going to get its rally into 2024. I would not be surprised if the index can make itself all the way up to about 160 and even higher than 160 at this point. So healthcare performing beautifully. Moving on to IWM Russell. IWM Russell also looking good, guys. And finally, the IWM Russell did exactly what I wanted it to. It closed a weekly candle above our 201 mark. So you see how often we were getting rejected in the past from this area. This is the first weekly candle, significant close all the way since back from April 2022, almost 2 years at this point, guys. So has to be notable to us. So at this point, guys, weekly bulls, full control, weekly reconfirmed uptrend at this point. And if we do get a little bit of a retest of the support zone in the forthcoming weeks, let's say we get a March sell-off, that is when I'm going to be looking to play the Russell myself, break out of the range, use it as support, and ready to run for the rest of 2024. I will be looking there. Weekly bulls looking very good. Daily bulls are also in full control. Daily uptrend confirmed, right? Any pullback at this point, just going to be for a daily higher low, anything above 196.50, daily higher low for further trend continuation. So looking for that pullback here, potentially into the next week, next 2 weeks, looking for a pullback. That is when I'm going to be buying the Russell myself. And monthly, look at this monthly breakout, guys, right? Monthly consolidation here for a couple of weeks, ever since January and February, right? Monthly higher low is set. And now we're looking for the first monthly uptrend in the Russell since all the way back to the pandemic years. Has to be very notable to us, guys. Very notable that the Russell is doing this. They are pretty much next up in line for significant gains in 2024. So we're going to be anxious to build a position in this over the next coming week or two. Now moving on to the Dow Jones. So Dow Jones also still looking extremely healthy, guys. We never had any red flags. We were in a consistent daily uptrend right here, and we were looking for the daily higher low. Anything above 38,350 was just looking for a daily higher low for further trend continuation. And look where the market stopped. Pretty much exactly where we pinpointed at it, right? Previous resistance, now support, and your 12 EMA, this yellow line moving average, is there as well. Acted like beautiful confluence. So the bears had short-term control of the hourly, and as you see, when the bulls regain the hourly uptrend, that marks the end of your daily consolidation, and then we are moving on potentially to higher highs at this point. If for ever which reason, guys, we were to roll this over into daily downtrend, no problem at all. Look how much space the Dow Jones has. Anything above 37,100. Just going to be looking for a weekly higher low for further trend continuation. And on the monthly, everything looking equally as bullish here, guys. Monthly uptrend is absolutely gorgeous. The Dow Jones, in the event, I'm not saying that it's going to happen, but let's say it does happen, right? Let's say we get some extended sell-offs here. Jerome Powell absolutely kills us in March, says we're not increasing rates at all for the entire year, and for the next 10 years, we're going to keep rates the same, right? Let's just say that, right? It's a bit extreme, but still, let's say we have a monthly pullback, guys. Monthly support area is going to come right at your previous all-time highs. Just looking for a monthly higher low for further trend continuation. The Dow Jones has broken out of the all-time highs. No turning back at this point. Should be a continued very good year for them. Now, let's move down to our big tech names, and then we'll do my portfolio. So, in terms of Apple here, guys, Apple down 0.6%. Apple closing below the 180. So starting to test our support zone after having acted for support. How many touches of 180? 1, 2, 3, 4, 5, 6, 7 at this point, right? It's been a big area. Now starting to close below into our area. So daily bears now have full control. It's a daily downtrend. It is also a weekly downtrend at this point since we flushed the lows. So that means that we're in extended monthly consolidation for Apple. Is it a big deal? Not at all, guys. I still expect this level, this green box right here, 180 down to about 170, 167-ish, is going to be a very solid area of support, talking about previous all-time highs and previous support used as well over the course of last fall. Don't believe Apple is going to fall much below 170, even if we do get down there. Nice little sell-off for the stock, nice little area to accumulate and build a position for Apple if you don't have one as of yet. Very, very good. I will continuously look to trade Apple, guys. As long as it's below 180, I am pretty much going to go heavy on Apple. The further it drops, the heavier I will go, all the way down to about $170. I've been playing it every single week now for the past 3 weeks. Absolutely love this company for what it is. It's true that the revenue growth for 2024 isn't going to be that fantastic, but that being said, guys, the company makes so much free cash flow and is always buying back shares as well. So at least you do have that to fall back on. So daily bears are in full control. What you need to see if you're a bull, need to see the bulls recapture as much as possible of this drop right here. Get me as close as possible to 185 to set up the potential for a daily higher low and daily trend change. Until that time happens, the bears are still in full control, just looking for a daily higher low for further daily downtrend continuation. So Apple, not looking that bad, guys. If anything, it is a decent area for buying stock with a lot of support down here if you are going to make those short-term swing trades. Now moving on to AMD. AMD rocketing up again, another 5%, guys. So we were commenting on this, guys, in terms of AMD, right? This daily engulfing move coupled up with a daily bull flag, which was extremely bullish for the breakout. Why was it leading to a potential bullish bias? Well, the bulls were in full control of every time frame. Monthly bulls, full control. Weekly bulls, full control as well. Nice little weekly uptrend. And we had 4 or 5 weeks of weekly consolidation where the price could not move below its previous support of the all-time high. This was a weekly bull flag, and as soon as your short-term range started looking like it wanted to break bullish with this engulfing move and bull flag, that was the cue to potentially know that AMD was going to rip for another leg higher, and here it goes. Nice little further leg higher on the weekly. At this point, any pullback, guys, just going to be looking for a daily higher low, anything above 173, daily higher low for further trend continuation, and keep an eye. The above portion of this area of consolidation is now going to be support, talking about the 182.50 area. So that should be very good area if AMD does so choose to pull back. But so far, so good. AMD looking very, very amazing for in terms of your price action right now. Nothing bad to say. The bulls are in full control of every single time frame currently. Now moving on to Amazon. Amazon 0.83% to the upside. Coming close here, guys, to our previous area of resistance. We're right there, right? The whole 177, 178 area, we're into it. If we can break above this area, the next area of resistance is your all-time highs at 187. So Amazon looking extremely good. Daily bulls, full control. Anything, pretty much any dip right now, anything above 172.20 is just looking for a daily higher low for further trend continuation. I would like to see them mount above this area and then sit on it and then continue moving on towards the all-time high. No red flags on Amazon. In terms of the weekly, well, your weekly your weekly uptrend just simply continues at this point, right? Looks like it does over the next couple of weeks want to move higher into your areas of all-time highs. And on the monthly, your monthly bulls just remain in absolute full control of this stock. Should be a record year for Amazon stock in terms of their numbers, in terms of the free cash flow and profit margins that they're going to generate. So this is still one of my favorite big tech plays for 2024. It is looking absolutely gorgeous for the company. No red flags whatsoever. In terms of where I'm looking to buy, guys, at this point, right? Anything pretty much below 170, and I'm going to start to replay some Amazon contracts. Now moving on to Google. Google not having the best week indeed, is it? After some continued negative news headlines in the form of the news about their AI division, Google continuously selling off. Take a look at the amount that they've dropped over the course of the week, about 5%. What does this mean for us? Discounts, guys. It means discounts, and boy, am I looking forward to accumulating more and more Google shares down here. That being said, we are in a significant daily downtrend right now, and currently teetering on losing this big area of support. This big area of support is previous resistance, now should be acting as support, talking about 141 to 138. Now, if we lose this line right here, guys, almost lost it yesterday. If you lose 137, you unfortunately lose the weekly uptrend. And at that point, you're just into extended monthly consolidation. Monthly consolidation, I could see us, worst case scenario, dipping down to the 12 monthly EMA, which would be about 132, 131. But if we do get down there, guys, it's an extremely juicy level for Google. At that point, Google would be trading roughly for under 20 times forward earnings. It looks extremely good for the valuation and for what it is. So in terms of the daily downtrend, we're just looking for potential lower high into lower low. What do we need to see for the bulls to reverse this? Well, I need the bounce. If we start a bounce next week, need to get as high as possible to 146 to create the space for a daily trend change. Need to get back above these two yellow lines, guys, and start reusing this big area of support that we're now too far deep into. Need to get mounted above it and start reusing it as newfound support, reset the daily uptrend. Until that time, the bears remain in full control. As I said, guys, first downside target as of currently is going to be roughly the 133, 132 zone. And then anything lower than that, we really start dipping into our lower areas of support, talking below the 130s, 130, 125. At that point, guys, it becomes a back up the truck opportunity for me for Google. So everything not looking too bad on Google. If anything, just like Apple, two of the best companies in the world currently at significant discounts from their all-time highs. So could be a very nice opportunity to pick them up. Now moving on to Meta. Meta cracking above 500 finally for the first time, and that's exactly what we were saying in the prior videos, right? Meta was looking extremely bullish with this daily uptrend. Just a matter of time for them to break out. So now we finally have the breakout. Daily uptrend is just continuously moving to the upside right now. Any pullback at this point, anything above 479, just gonna be looking for a daily higher low for further trend continuation. And now that we're above the significant area of resistance, which is pretty much 488, I am expecting, guys, if we do pull back, we're gonna come down, sit on this area, and just mount above and continue gaining the levels right now. In terms of the weekly is also looking very, very bullish, no red flags at all. Beautiful weekly uptrend. Weekly higher low is set. Higher high at this point, anything above 452 if we were to have some extended consolidation, just looking for a higher low for further trend continuation. And even on the monthly, guys, look at this monthly chart on Meta, right? Nothing bad to say about the company. The bulls are in full control of every single time frame. And I just reiterate, guys, even though Meta is cheap out here, I do want a specific level for myself personally. And for myself personally, that's pretty much 430 down to 420. I'm not saying that it's probable that we go down below there. I'm just saying if we do, for some reason, go down below there, that is where I'm looking to buy Meta myself. Now moving on to Microsoft. Oh, excuse me, guys, had to get some coffee. So in terms of Microsoft, we are looking fairly good here. Microsoft trying to reset the daily uptrend, not fully getting it yet, but trying. Microsoft having set the daily downtrend back here, engulfing move after your NVIDIA earnings, now looking to reset, right? Daily higher low into higher high means recapture of the daily uptrend. At this point, guys, the weekly higher low is most likely set as well, talking about 397.65-ish. So looking very good. Daily uptrend almost reconfirmed by the bulls at this point. Weekly uptrend just continues to be extremely strong for the bulls too, right? You can see we never really lost the weekly uptrend ever since this November rally. And even on the monthly, guys, monthly bulls are in full control. No red flags whatsoever for this chart. Microsoft, for me personally, just like Meta, I know it may not get down here, but I'm looking for Microsoft anything under 390, 385, which would be a discount from current prices of about 6-7%. So I'm not saying it will go down below there. I'm just saying if it does go down below there, which the technicals don't indicate short-term retracements as of yet, but if we do, that's where I'm looking to play the company myself, 390 to about 385. Now moving on to Netflix. Netflix, 2.72% to the upside. Finally starting to hit one of our previous resistance areas. We've been talking about this one ever since 575. We were saying if the company can successfully break and close above 575, they are going directly to our next line of resistance, 620. Well, here we are. We're there right now. And then the all-time highs of about $700. So we're at that last level of resistance. And then we go to the all-time highs right now. Netflix looking very good. Daily uptrend just continues to be reconfirmed by the bulls at this point. Any pullback, just looking for a daily higher low, anything above 568, looking for a daily higher low for further trend continuation at this point. So your bulls extremely healthy, now well above our previous area of resistance, which was the top end of this range, 2020-2021 range, right? So if we do get a little bit of a pullback, let's say the markets pull back altogether over the next few weeks to start off the month of March, and we get a daily downtrend, that would just be very healthy weekly consolidation, guys. And now Netflix with a lot of space, anything above 550, just looking for a weekly higher low for further trend continuation. And monthly, your bulls are in absolute complete domination control mode right now, right? Monthly uptrend is confirmed at this point, has been confirmed for a few months at this point. So none of big tech really is looking bad when you look at the longer form timeframes. Now moving on to NVIDIA. NVIDIA up to $822, guys. This is what we were looking out for in yesterday's trading, right? We were saying daily consolidation was underway, and then we were looking at the hourly time frame. When will the bulls recapture this hourly trend from the bears? They did it yesterday, and I said, right, this could be the start of our new move daily higher, and that's exactly what happened over the course of the past 2 days. The hourly trend shift started, and the bulls just continuously ran with it at this point. NVIDIA up 4% on the day today. So your daily uptrend, guys, simply just continues. And look, where can you find the last daily downtrend? The last daily downtrend, guys, was last October pretty much, and then we had one in early November. Since then, nothing, right? Since December, it's just been pretty much categorically up, no daily downtrend. So how do you want to short this stock for extended consolidation if the bears can't even set a daily downtrend? I'm not even talking about a weekly downtrend, which is what a lot of people want upon shorting this stock. Step number one, if the bulls still control the daily, you should not be trying to pick the tops of this stock. Wait for the daily downtrend confirmed, and then you could potentially make a play on some extended consolidation. As of now, that's not happening, guys. So daily bulls in full control at this point. Any pullback currently, just looking for a higher low, anything pretty much above 770 is going to be looking for a higher low for further trend continuation on NVIDIA. Weekly, obviously looking extremely bullish, right? And if you're going off of RSI levels, you might be waiting there for a very long time, guys. Look how long NVIDIA can stay overbought. Talking about May through July of last year, and it doesn't stop there. NVIDIA has been, known to do this in prior years as well, where they can stay overbought for 1, 2, potentially 3 months at a time on the weekly before some significant pullback. So just keep an eye out for that. And on the monthly, doesn't even need to be said, bulls in absolute full control of this company, everything looking good. Now moving on to Tesla. So Tesla also looking fairly decent, guys, still in a little bit of a daily uptrend right now. Sideways consolidation for the past 4 days, but that's fine. I'd rather have sideways consolidation than just dropping off a cliff, right? So at least we have sideways consolidation, still looking for a daily higher low, anything above 192, just looking for a daily higher low for further trend continuation. And you guys know my stance on Tesla, right? We need this daily uptrend right here to continue into the 220 to 230 range. If you guys want to see some significant turnaround in the second half of the year, that would need to be, right? It's all in relation to this weekly down move right here. So we've been in a weekly downtrend at this point for a very long time, for pretty much the past 6 months, right? So what this stock needs to do to reverse your longer term timeframes into a weekly uptrend, need to get a bounce to at least 220 or 230 to the upside, gives the bulls enough space to reset the weekly higher low into weekly higher high. That's why I say, for that to happen, for that weekly bounce to get all the way up there, this daily uptrend is the one that's going to do it. Need to get up to about 220, 230 on this daily uptrend move. Anything short of that, guys, and it's just going to leave the bulls with not enough space to set the higher low and higher high, the probabilities would favor the bears for continuation follow through to the downside. If we ever, guys, lose this daily uptrend into the next few weeks, we are going to be retesting the 180 down to 170 area, these two lines of big support for Tesla, and this downtrending channel line for Tesla long term as well. So just keep that in mind. This daily uptrend right now is extremely important. We have not recovered the required amount, still need about 10-12% for it to be a nice bounce on the weekly. So just keep that in mind. And on the monthly, guys, we're still in a monthly downtrend as well. So first step is correct. The bulls have the daily uptrend. Now we need to reverse the weekly uptrend, and then only then can you look to reverse the monthly uptrend. So that's why I say when bears are in long-term control of your monthly and weekly, you guys see how long it takes to reverse those time frames. Well, it's the same logic when everything is to the bulls, right? If you want to see, let's take the extreme opposite example. If you want to see a monthly downtrend on NVIDIA, it means first, your bulls have to reverse the daily downtrend. Then you have to somehow reverse the weekly downtrend, which just the weekly could take up to a month and a half, 2 months. And then to get a monthly downtrend on NVIDIA, we're talking at least 3, 4, 5 months of trading before you get a monthly confirmed downtrend. That's how long they take to turn around. So that's why this turnaround process on Tesla now is crucial for them to get started. That way we can start forecasting what's going to happen in the next 1, 2, 3 months. Very important, guys. In terms of Palantir here, Palantir looking very good on the day. So they pulled off the engulfing move, which is one of the moves we were potentially forecasting for. So after having lost the daily uptrend right here, it was daily downtrend. And we were looking how high can the bulls bounce to set themselves up nicely to recapture the daily uptrend that they lost. Well, you can see now they've bounced about 100%. So now it remains to be seen. Next week, can they do the full V shape and break these highs? Couldn't quite break them today, 25.66-ish. Broke them by a few pennies, but not closing above. If we can get the full V shape, gives the bulls enough space to break above, retest this previous area as support at that point, and just continue the daily uptrend to the upside. Or if ever they fail at these previous highs right there, pull back a little bit, they've created enough space to set the daily higher low into daily higher highs as well. So looking fairly good for Palantir, nothing bad to say. In terms of your weekly is looking very bullish as well. Weekly bulls in full control at this point. I would dare to say that the weekly higher low is set last week. 22.35 is going to be the line in the sand level for your weekly. So if ever we lose that level, that would mean weekly downtrend. That would mean a bit of monthly consolidation, but any consolidation for Palantir right now is extremely healthy. I am expecting us to maintain above the $21 to $20 level, which is the bottom end of your 2021 range and also your previous 52-week highs. So if ever the price pulls down into there, that's where I'm looking to play Palantir personally myself. As of now, everything looking very good. Upside resistance target, guys, remain set at about $28, $28.30, $28.50 in that range. Now, lastly, PayPal also looking fairly decent here, guys, today. You can see whenever we approach this trend line, it gets very, very choppy, doesn't it? We tried to break it in the past. Look at the violent reactions that we get when we try to break above it. Once again, try to break above, violent reaction. Obviously, here is earnings, so you can't really count that day. But just to show you, when we try to break above this nasty downtrending channel line that we've been stuck in for 2 years at this point, the market just doesn't like it. So eventually, we will need to see a mount above. Now, the one good thing is now that we're clearly above our area 60 to 57, I was calling this the cannot lose zone because it would break all weekly structure. Now, we're back above it. So now the daily bulls have the daily uptrend. Any pullback at this point, just looking for a daily higher low, anything above 57.18, daily higher low for daily trend continuation at this point. And now at least we're above this area, 60 to 57, so it will be able to be used as support. Now, you can see a few things tightening up, right? We're tightening up above this range, and we're tightening up very close to this trend line, guys. So if the overall market continues its participation north, I do believe that we will finally get one of our trend line breaks on PayPal right here. And at that point, guys, momentum is going to be key. I do believe that once that trend line breaks, we are going to be carried 65, 70, even as high as $75. I would not be surprised, guys. It's going to be a very, very big technical breakout trade. It's a trade that a lot of people have been waiting to take, ever since PayPal has been in this extended downtrending consolidation mode, right? So looking forward to that. If we do get a nice little break above could be a nice little play here to be retesting this area of support 58, looking for that trend line break to the upside. So everything looking very good on PayPal on the daily in terms of that. In terms of your weekly analysis as well, weekly is looking very, very bullish too. Still have not closed a weekly candle below the $57 mark. Still not losing the pattern of weekly higher lows. Couple instances where it dipped down below intra-week, but no closes down there. So your weekly is still looking healthy at this point, just looking for the weekly breakout of this downtrending trend line. And on the monthly, it's exactly the same here, guys. Monthly chart is just the same, just looking for the breakout of this downtrending trend line. So it could be happening over the course of March, April, May at this point, looking very forward to PayPal being able to complete that pattern. So with all that being said, guys, now let's take a look into my portfolio. So guys, taking a look at the portfolio, it's been another beautiful week of generating premium using the put wheel strategy. So in terms of your year-to-date performance, we are now up to about 8.5% as a whole, still in a very tight race with our indexes, guys. Year-to-date performance on the QQQ is about 9.8%, and SPY year-to-date is about a 8.62%. But keep in mind, since we are running the wheel strategy, we don't benefit from those buy and hold gains. And there's been significant buy and hold gains on a year-to-date basis, most notably by Amazon, Meta, and NVIDIA, largely contributing to some QQQ outperformance. So without any of those ridiculous gains, we're still able to keep up on par with the S&P 500 and the QQQs. That's in spite of coming into a little bit of a drawdown earlier on in the year, as we were assigned a number of plays that were either sensitive to China data or interest rate data or a combination of both. We've since nicely recaptured most of those losses, being able to roll out of those positions using covered calls. And now, since we've had largely full buying power on the account, you can see that we are running a very, very good pace. And I do believe we will continue to maintain pace with the S&P 500 and QQQ and outperform them over the course of the year as well. That being said, guys, it was a very heavy week of premium writing. So before I take you into the positions that are remaining on the account, let's look into a few of the positions that I closed. So I'll bring out one of my favorite softwares in the world, the Notepad software, so you guys can see all of that premium. Now, we're going to go through these relatively quickly, but I just want to show you guys how much premium we were able to generate on the week, talking about almost $1,300, so about $1,282 on the week. And these are all the positions that were opened and closed during the week. So just so you guys don't think that I'm just pulling these numbers out of anywhere, we're going to go through each one of these orders relatively quickly, and I'll explain a few of the details as to why I took each position. So shall we? So in terms of Google was one of my trades that I was talking about on last Sunday's video. We wrote the 138 puts, which were at support, got about 91 cents for those, and they were closed pretty much yesterday during the day for about 23 cents, so a nice little profit there. Now our second trade, Apple 180s, was also featured in my video, and actually the Apple 180s, we got $1.04 for them, but Apple ending under 180, so I am now the proud owner of 100 shares of Apple for next week. Am I nervous? Not at all. This is an extremely good buying opportunity. Looking forward to writing covered calls on that one, but we did get about $104 in premium for writing those Apple puts specifically. Now, third trade that we took was 2 times Caesars 39.5 puts. They were also featured on Sunday's top 5 options video, just because Caesars was at a very decent area of support, $39, $40. So we went with the 39.5s, and they ended, we actually closed the trade to be able to open more trades. But as a whole, guys, you can see that we did generate about, anywhere probably about 80%, 75, 80% profit on the trade for just a few days. So fairly happy about that. That Caesars position should be right here. 39.5 puts open for 28 cents a piece. Sold 2 of them, and then we bought them back to make other plays right here at about 9 cents a pop. So very happy with that, the way that one played out. Then we had 3 times Rivian 11.5 calls. So we wrote covered calls on a Rivian position that was signed at $12. Rivian now, with our premium, we should be currently sitting on premium, a cost basis of Rivian at about $11.55. That's because we had the covered calls for about 12 cents for this week. It ended below $11.50 for the week, as you can see right here, $11.35 on the close. And what we did is we wrote 11.5 covered calls for next week for about 45 cents. And you can see those are still active right here. Got about 45 cents for them, which is amazing, guys. Talking about almost 4% for the upcoming week. So very happy with that. Brought our average significantly down. Average on Rivian now about 11.55. If ever the stock mounts above 11.50 towards 12, I'll continue rolling up for a little bit of a profit. Hopefully this position will be profitable within the next 1 to 2 weeks. Now, in terms of the remaining positions, we did also write 2 Unity $25 puts for earnings. I believe I mentioned those on the channel on Tuesday. We got about 40 cents for those. Whenever you see an earnings play, guys, I'm always writing about 2 standard deviations, so twice the expected move on a given week. If ever the stock's expected to move 10% after earnings, I usually write 20% and below. So always about 2 times the expected move for earnings plays. So I'm very, very conservative in my earnings plays when I do take them. The Unity puts are right down here for about 20 cents. And you can see we closed those the following day for 90% profit for about 2 cents on those. So very good trade there as well. BABA 79 calls. We had covered calls on BABA, which pretty much expired worthless because BABA did not close above the $79 mark, closing at about $74. Our average cost with all the premium we've gotten so far since being assigned back here at $82 last earnings cycle, our total net cost now is down to about $77.42. Very, very good. So soon to be profitable on this position as well. Very good management of the position as well, being able to write so much premium against the position and lower our average cost. Now, in terms of the next position here, we have 4. So we took a trade on 4 prior to their earnings. We took the $60 puts. 4 was a company at the time before earnings. They were trading roughly about $75. So we went with the $60 puts, and they were about 3 weeks out. So what I was looking to do was pull premium forward. I was fairly confident in their ability to at least maintain or guide up for the foreseeable future, which has happened. They even got some buyout news shortly after their earnings a couple days later, but was a very good trade. I was able to close this trade after earnings here for, over 90% profit. So you can see that right here. I got about $1.47 for them, but they were March 15. So about 2 weeks out, but still the very following day after earnings, we were able to close those for 30 cents. Just makes sense, right? I'm not going to hold this position, right, for 0.5% for an additional 14 days of trading. It just doesn't make sense. That's why I closed that trade right there. Then the following trade was Workday. We wrote the Workday 270 puts. So once again, another earnings trade. Workday prior to earnings was trading roughly about 307. The expected move was down to about 287, and we wrote the 270. So it was really twice the expected move. 270s was a very juicy area of prior support, talking about the previous weekly higher lows. So that's the area that I targeted, and we were able to close that the very next day. You can see that right here if I can find it real quick. So Workday 270s, wrote for 235, closed for only 7 cents, guys. So over 90% profit, 95% profit in only a single trading day. That's very, very good. Here's the closure of the 4 contract, by the way, as well. So that was a very good trade too. eBay, another earnings play. We played the 41 puts on eBay. So eBay, prior to earnings, they were trading roughly right around the $44 mark. I targeted 41 because I found it to be a very juicy area of private support and was of previous support, and was also about 2 times the expected move. eBay was only supposed to move about 5% after earnings, and we wrote about 7.5%. So it wasn't actually a 2x off the expected move, but still got some good premium, and the risk was fairly low on this trade too. Very, very decent support level. So we were able to get a very decent trade on eBay there as well. You can see here the 41 puts sold for about 26 cents, which is just over our 0.5% rule. And then we were able to close them, I believe, the following day as well. If I can find that trade real quick, give me a second here, guys. Too many trades, right? There you go. So eBay, we were able to buy them back for about 2 cents, which is pretty much 90% profit by the next following day. Now moving on to the next trade, we had the Okta 71 puts, another earnings trade as well. So we got 44 cents for those. Okta 71s filled for 44 cents. And you can see we closed them the next day after they beat earnings for about 3 cents. So pretty much 90% profit as well. Okta, another trade that I was trading relatively below the expected move here. So you can see that we wrote the 71 puts. Okta prior to earnings was about at $87. So we had a very wide margin here, guys, talking about, a very wide margin. They were trading at about 87 prior to earnings, and we went all the way down to the 71. So about a 19% drop, and 71 was really in line, guys, with this lower support area, $70, $71 range. That is the area that I was targeting, but the trade went in our favor, and obviously we were able to close that as a profit, so very good. Then we went with 2 CELH 55 puts as well. So CELH also with earnings this week. So CLH prior to earnings, they were trading at roughly $67. We went, guys, with the 55. So take a look at these CLH contracts. 33 cents for 55 strike, over 0.5% prior to earnings. 55 was really coming back into my, towards my sweet spot, not quite fully at support of 51, but was representing a decent sell-off price from before earnings. That would have been a sell-off of about 17, 18%, and I definitely would have been interested in buying that dip. CLH obviously rocketing after that, so we were able to close this trade shortly after here. So 55, we got the 55s for 33 cents. We were able to close them the very next morning for about 4 cents. So once again, 90% profit on that position too. Now, the next trade, CRM 260s, another earnings trade. So we wrote CRM 260s for about $1.25. Here's the CRM trade. The opening of the CRM trade, 260s for $1.25, and then we closed them for about 5 cents. So once again, over 95% profit. CRM, easy earnings trade, guys. Prior to earnings, it was trading about $300, and we were very conservative on this one, guys. 260 to the downside, right? So that would have been a sell-off of about roughly 20%, or not 20%, sorry guys, about 13%. Earnings expected move was about 5-6%, so we did go twice the expected move on that. And the 260 range, guys, was really the bottom end of this prior weekly support. You can see it a lot better on the weekly chart right here. We were targeting this lower area right here, all the way down 260, 255-ish. I went with the 260s. And everything played out beautifully. No red flags with the company at all. So another great trade on that one. Then we went the Mara 19.5s and 2 times Mara 22 puts for their earnings. Unfortunately, Mara was a bit of a mishap trade for me. Now, they did do fairly well on earnings. They actually opened the morning after earnings here at about $30. And when I saw that on the morning of the Thursday, right, they were trading roughly $30. I figured, you know what? It's not that bad. Excuse me. It's right here, right around $29, $30. I was thinking, you know what? Not that bad. I'm going to let this one ride out until the end of the week. And then over the course of the next few hours, it went all the way down to 25. And that's kind of where it ended, 25, 26, 27. So unfortunately, I was more profitable on this trade, and they were for next week. They're both for March. Mara's, these ones were for next Friday. So I wasn't willing to hold these positions over the weekend here in the event that crypto was to do a little bit of a pullback on the weekend. So I closed these at a very small profit. I mean, the trade area was fairly conservative. We were talking prior to earnings, right? You know, it would have been a drop of roughly 27% for our first strike, and then an additional of 37% for our second strike. So you're able to close those at a slight little profit. Not the best trade. Could have closed them earlier on Thursday, but still we got some decent profits from those trades. Just not looking to hold them over the weekend. And then our few last ones here, we have the Autodesk 232.5 puts. Those ones were for next week, March the 8th. We actually wrote the 232.5. So here's your Autodesk trade. Right, Autodesk prior to earnings was trading about 258.66, and we went all the way with the 232.5s. Where's 232.5? Well, coincidentally, it's right at my breakout retest zone, isn't it? Right, so we were looking for this range, this previous support, big resistance area should be acting as current support. The retest of the range potentially 232.5 was right down there. We were rewarded handsomely from those. Autodesk beat earnings. We were able to close this trade extremely well, so you can see that. I'll show you guys all these at the same time. Here are the Mara trades that we wrote. Then we closed those Mara trades over the course of the day today. Not that much profit, but still decent little amount of profit. Here's your Autodesk trade, 232.5s for about $1.70. So got a lot of premium on this one. Quite happy with this one. We closed them earlier on the morning. It was a pretty much automatic take profit right at the open for about 15 cents. So locked in all of that profit for next week. We pulled all of it forward and captured it this week. And Zscaler, same thing. Zscaler also had earnings. We went with the 182.5s on Zscaler. It's one of the last ones I'll show you guys. Don't worry, we're almost done. So 182.50 was all the way down there, touching our previous areas of resistance and also very close to prior resistance here in the past. So we went a little bit higher at the 182.50 mark, and that would have been a significant drop. It was 2 times the expected move for Zscaler. That would have been a move down of about 24%. The stock was only expected to move about 10% after earnings, and that is roughly what they moved. So we were all the way down here at 182.50. You guys can see that we got for those puts, we got about $1.04, which is over 0.5%. 0.5% would have been about 91, 92 cents. And we closed them this morning. Automatic take profit on the market for about 9 cents. So gaining 90% profit on that one as well. Very, very good. And then we have one that we got assigned as well, Snowflake. So most, if not all, of these earnings plays have played out good, except for Snowflake. Snowflake, we did go for twice the expected move. So the expected move on Snowflake was only about 10, 11%. It was about 205, 204. And then we went almost 2 standard deviations lower at about 187.50. 18.5% drop, and we were assigned. It ended below 187.50 ever so slightly, so we did get assigned some shares in Snowflake, and you can see that right here. Actually, it logged me out. Let me log back in for 2 seconds, guys. Give me a quick second. Sorry about that, guys. So as you can see, Snowflake position is here right now. We got about 91 cents for those, and they unfortunately ended below. Those are for next week, March the 8th. So we'll see if ever it ends above this strike price, we will just collect this 91 cents. If ever it ends below, well, we will have to manage the position and start writing covered calls. But all in all, guys, a very good week of premium generation. All of these earnings plays, guys, were extremely conservative. I know I tell you guys not to play earnings, and that is still the norm that I do recommend for most traders because it is excessively difficult to manage a position if you don't know the company that you're trying to make a play on. And if ever they go down 15, 20% and after earnings and you don't understand why, you may want to sell out at a loss right away. And unfortunately, that's just going to hurt the value of the portfolio, right? So I play these earnings, but when you see me play earnings, just take note that I'm always staying within my 0.5% to 1% rule, and I'm always going pretty much at least 2 standard deviations or close to 2 standard deviations of the expected move, aka 2 times the expected move. If a stock's expected to move 5% up or down, I'm going 10%, right? So just very, very conservative. Very decent week of premium generation, but we did get stuck in this Snowflake position right here, but at least we have an extra week of time on that one to see how it plays out. Now, in terms of the remaining positions, guys, you will see that Apple is getting assigned. Rivian covered calls are already in place for next week. Baba, this just goes away since it expired worthless, so we'll try to write some more next week. GDXJ, I got some very decent premium on them for next week. So you guys know I got assigned 200 shares of GDXJ at $33. Our break even on those currently right now with the covered calls I wrote for next week is about 31.67. So now the market is well above our area of entry. And you can see, guys, that I actually split this one down the middle. I did one contract here at 33 for 77 cents, and then I did one contract at $34. So I really staggered the position right here, brought me in some total decent premium here. Our average cost now down to 31.67, nicely in profit. So if you get called away on one or both of these legs, right, the 30 at $33 and $34 next week, I will be very happy with those profits. Now we took a chance here at the Google 137s, wrote those this afternoon, got $1.09 for them. So if Google ends under 137 by next Friday, I will be assigned some shares and will be very happy to be assigned some shares. Every single time I've been assigned Google shares in the last 3 months, we've made at least $1,000 to $1,500 on the upside thereafter on the reversal. So looking very forward to if I am assigned these shares. Snowflake position we went over. TMF, these calls are now finally back into profit. So your 20-year bond play is looking good. We still have our share plays here, SPGI and MCO as little swing trades. Ethan, Bitcoin still remain. Nike not high enough for covered calls. Baba also not high enough for covered calls just yet. GDXJ we went over. Rivian we went over as well. And then our Canadian banking ETF sitting almost at $1 per share in profit on roughly 1,000 shares. So all in all, guys, very decent week in the portfolio. Nothing bad to say about that. So that's pretty much everything for today's video, guys. Hopefully you guys enjoyed it. If you did, consider dropping a like. It really helps me out for the algorithm and lets me know that you appreciate this type of content. And as usual, if you are new to the channel, consider subscribing. We do these recaps Monday through Friday and then a few videos on the weekend when we have some time, and that video comes out every Sunday night as well. Top 5 options plays I'm looking out for the foreseeable week coming. And as usual, guys, if you have any questions as well, please feel free to leave them down below in the comments. Anything you want at all. If you want me to look over a specific stock or technical analysis or an options play, anything you want, or maybe an earnings call that I missed that you want a review on, leave it down below and I'll do my best to accommodate you, potentially putting it in one of the videos or answering you directly in the comments section. So take care, guys. Have a great weekend, and I will see you over the course of the weekend, especially on Sunday night for that top 5 options plays for the upcoming week. So take care. Have a great weekend. Peace.